Companies are investing in low-income rental housing and getting big returns. With more on how corporations are picking up where banks and mortgage lenders left off, we bring in Monica Bertran for more on the story. Monica.
And Deirdre, investing in low-income rental housing has been dominated by banks and mortgage lenders for decades, but now returns as high as 10% are luring companies including Google, Kroger, and Waste Management. Google, whose motto is "Don't be evil," put a total of $111 million into a tax credit fund this year, with the funds directing equity to 480 affordable rental units in the West and Midwest. Trash hauler Waste Management bought a stake in a limited liability company in April that invests in low-income properties, and Kroger invested about $40 million this year in a tax credit fund.
Google and Kroger have the advantage potentially of being early movers. Prices in LIHTC have been down, so they're getting particularly attractive yields, or they have been getting particularly attractive yields. But any large corporation with sustainable earnings, it's an investment one ought to look at.
Here's how it works. Low-income housing tax credit programs allow companies to invest in these low-income houses while receiving tax credits. In a typical deal, each dollar of credit might be sold for about 75 cents. It's then applied to the investor's tax bill. That discounted credit and depreciation could generate an average annual yield of about 10% over the life of the investment. Now, that's really attractive to companies helping offset taxable income and escape these record low yields on government and corporate bonds. Now, according to Ernst & Young, low-income housing tax credit investments peaked at $8.9 billion in 2006 when yields were about 4.25%.